Now we are going to turn to our panel on addressing services and digital barriers in a U.S.-India agreement. I invite Rick Johnston, Managing Director, Citi Global Government Affairs, to the stage to moderate the panel discussion and invite panelists to join Rick on the stage.
We're going to have some fun and compliments to you folks who have hung in there, because now you're going to get the secret sauce. US, Mexico, Canada, that's a yawner. But now we're going to talk about India. And we're going to like it. So joining me, and we're on a clock here, but joining me on the panel is Susan Greenwell. She's Senior Vice President, Head of Global Government Relations for MetLife. Richard Rossow or
Rossow.
Rick. Yeah, Rick. I like Rick.
Cool,
better.
Rick. No,
Okay,
not
I'm
good.
gonna hit you with a really tough question, buddy. Rick Rossow, Senior Advisor and Chair on India and Emerging Asia Economics at CSIS. And then Malachy Nugent, hey, Senior Vice President, Policy and Research for U.S.-India Strategic Partnership Forum, and a recovering diplomat from once upon a time. We'll tap into that expertise in a moment. We're going to start with a couple of initial statements by each one of the panelists, 3 minutes hopefully or so, and then we'll get into a little bit of question and answer, but we're running on a tight schedule and the former panel went over, so we may have to cut this a little short. All right, Susan, over to you.
Thank you, Rick, and thanks to CSI for organizing the summit. I thought I would start by just telling you a little bit about MetLife's history in India. I think on the panel, I'm the industry and company perspective. So to ground my comments, I thought I'd just tell you a little bit about our story. So India opened the life insurance market to private insurers in the year 2000, and MetLife entered the Indian market in 2001. When India opened the market, they had a 26% foreign direct investment cap for foreign life insurers. And most foreign companies went into the market with an Indian partner that owned 74%, and then the foreign insurer owned 26%. MetLife opted for a different model. We put together a group of Indian investors so that our 26% stake was the majority stake. This has had both benefits and challenges over the years. Managing multiple partners has certainly been a challenge. But we felt strongly at the time that we were the insurance experts and we wanted management control. We've managed to grow that business very well over the time that we've been in the market. We're one of the fastest growing life insurers in the market, and we're a top 10 player amongst all, including the domestic players. In 2013, we brought on a state-owned bank, Punjab National Bank, or PNB, as a strategic investor and distribution partner. And that has now given us presence in almost every Indian state. So we're able to reach customers throughout the country, which is something we wouldn't have been able to achieve on our own without that partnership. We're also supported in India. Our global businesses are supported by several global capability centers. I'm sure many of you in the room also have these in India. We employ roughly 5,000 people that support our businesses around the world in those centers. And we're a major institutional investor in the country. We have nearly $2 billion invested in central and state government instruments, and another nearly $3 billion in other assets in the market. So it's a big market for us, and it's no secret why it's an attractive market. It has a huge and growing middle class, a young population. Right now, a favorable, sort of business-friendly government, not without challenges, but in general, a government that's looking to promote business and economic growth. And so that's where I'll start, just to give you a little grounding for some of the comments I'll make later.
A teaser.
A teaser.
Right. Rick.
Yeah, I've always got a bit of a Jekyll and Hyde going into a room like this, right? I mean, I walk into a room with everybody that's really bullish and I say, well, but there's problems. And then the other side of the conversation is when you walk into a room where everybody just sees the headaches of doing business in India, then you got to try to provide a little bit of hope and future, because some folks have been successful. And of course, we all assume that in the future, things will continue to get a little more open and a little bit easier. You think about what the Trump administration is mostly reacting to, you know, the evacuation of manufacturing jobs, the deindustrialize the communities like the one that I grew up in Michigan. And Modi's actually got that in spades. Our trade deficit in goods trade to GDP is about 3%, and it's driving elections. India's is as bad as 12%, depending on the year. And so when you think back to when Modi first came to office, you know, you got most voters stuck in basic agriculture, something we'd recognize from 200 years ago. An ox cart, a small plot of land, you grow enough for your family and maybe have a little bit to sell. That's where the voters are. And they want to get a lot more activity into the manufacturing side because of the trade deficit, because of the requirement for jobs for low-skilled folks. And services largely kind of ignored. You haven't seen a lot of attention from the government across, you know, 2.5 administrations on really kind of focusing on steps to grow services. But overall, foreign direct investment, you've seen, I would say, the most bullish government you've seen since India originally began opening up its economy, especially in Modi's first term, where they made about 40 positive changes to foreign investment regulations. But there's still a lot of restrictions that still are there and present in the market. So the job is not complete, and even some areas they've opened up, like the simple process of selling something to somebody. They've got different regulatory regimes if you're wholesale, retail, or if you're selling duty-free shops. If it's online or offline, if you're just selling one branded product or multiple brands, if you own the product, or if you're just warehousing it for somebody else, they get different foreign investment regimes for each one of those simple ways of selling something to somebody. So even as they keep opening, sometimes the openings themselves create different forms of complexity. So it's never a dull moment, but I'll wrap up my opening there.
For a dull moment, right? Malachy.
Yes, thanks. Thanks, Rick. And I also want to thank CSI for hosting this. This is a great opportunity. So you mentioned that I'm a recovering diplomat. I worked at the Treasury Department for about 25 years. About half of that was spent working on India. And so one of my first jobs at Treasury was as the India desk officer when Larry Summers was the secretary. And I had the opportunity to travel with him to India. And this was after the Asian financial crisis in the late 90s. And Secretary Summers went into his meetings in India at that time. You know, this was about 10 years after the economy had started to open. They'd start to liberalize, opened up to foreign investment, but it was slow. It was happening very slowly. And then the Asian financial crisis hit. And countries across Asia saw a steep drop in investment. They had financial crises, lasted 2-3 years. India was insulated from that because it hadn't opened up as much. And so by 98, 99, 2000, they were feeling very smug. They felt, we protected ourselves, we protected our population from the ravages of the global economy by opening very, very slowly, very cautiously. And then Secretary Summers, of course, in his way, took that and flipped it around and said, but you also don't have the benefits of the growth that these Asian tigers are seeing, because by that point, those economies had all rebounded and were continuing to grow at a much faster pace than India was seeing. So that, for me, as a young economist at the Treasury Department, that was very instructive of the way India thinks about the global economy and accessing the global economy. It wants to see the capital come in, but it wants the capital to come in a very cautious and deliberate way. All of the investors in the room know that it's easy-ish to get money into the economy, harder to get money and get your investments out of India. But they do that very deliberately. And Rick mentioned, of course, that the Modi administration since 2014 has been perhaps the most aggressive in opening to foreign investment since the liberalization started in 91. But even then, they're very, very cautious about the way that money comes in and what happens to it once it's in the economy. So I lay that out as sort of the groundwork for the way that India makes its decisions in all of these things, in goods and services.
Okay, so we're hearing all the positive aspects with a few footnotes in there about the difficulties in India. For any of you who have been doing business or done business in India, I know we at Citi have been there for quite a while, there are roadblocks. And of course, one could say bureaucracy, but that wouldn't get very detailed. On the other hand, it's real. Tax regime needs a little bit of work. So what I'd like to ask the panelists to do now is go through and not necessarily complain, but given the fact that we are embarked on a bilateral negotiation between the United States government and the Indian government, and some signals are there are going to be some significant breakthroughs. But what is it that's going to keep this ball rolling? That's going to make India continuing to be a really interesting foreign direct investment venue?
I'm happy to start on that one, Rick. And I, kind of alluded to this in the beginning of the story, which was I'd like to start with the foreign direct investment limits and how those limits are relaxed and the kind of 2 steps forward, 1 step back approach that we find. So
It's better than 1 step, 2 steps back.
True. And, the silver lining of the challenges in a market like this is job security for folks like us in the room who need to keep working on these.
Right.
So in our sector, the market opened with a 26% FDI cap. That was then raised to 49% in 2014. And then again, raised from 49 to 74% in 2021. When the increase went from 49 to 74, the government introduced some safeguards along with the 74%, which essentially, once you get more than 49% foreign ownership, there are some additional requirements. You have to hold a little bit more capital if you want to dividend your profits out of the country. And there are some governance requirements and citizenship requirements for key management personnel. And so it really was a disincentive to greater investment. And India has seen almost no new foreign investment in life insurance since raising from 49 to 74. But they've gotten the message. Obviously, we have been pointing out that the reason you're not getting more investment is that there are clear disincentives to own more of, an Indian life insurer because you're not on a level playing field with your competitors. If you have to hold more capital, that impacts the prices that you can offer, for example. And so the good news is, I think we're hearing all the right signals. The finance minister in her budget speech indicated a commitment to lifting the cap completely. So we should have 100% ownership if this actually gets through the upcoming session of Parliament, where it's been where it's planned to be introduced. And we have heard the right signals about addressing the FDI safeguards. We'll see. We've heard this story before, so we'll see how it turns out. And then I will just mention one other. The trend here is sort of policy-wise, there are some important and positive steps that are taken, but often for political reasons, there's some catch that is attached to the forward, the progress in policy. And so we have, a similar situation where there are mixed messages on the role of public sector banks in providing insurance to their customers. But again, this is one where most recently we're hearing positive signals from the government. So I would say from our perspective, we do feel that our concerns are not only being heard, but at least a commitment to being addressed. So we're optimistic. As you know, Rick is always an optimist on India, so we're aligned with him there.
Yeah. So yeah, the downside of things. Well, this was already been touched on, but India does not trust the private sector, just flat out to say it that way. And that also means that when they intervene in regulations and you have this balance of protecting consumers and letting business grow, here, maybe it's a little bit more towards letting business grow. In Europe, maybe a little bit more towards regulating to make consumers aren't hurt. In India, you take that to infinity. And that means heavy interactions, heavy regulatory change all the time, right? I led one of the largest exits ever out of India back when I was a CSI member at New York Life. And it wasn't about the slow pace of reform. It was about the fact that every week you wake up and you have to change something in your business plan. You don't want to change except every once every 5 years. In India, it's a weekly occurrence. So the lack of trust in the private sector and what that means for regulatory stability and coherence, you have a kind of a renewed lean on a few conglomerates. If you're in an industry where you're facing up against the big Indian conglomerates, you have some level of danger if they're looking to eat your lunch, and government will work with them on that to some extent. Infrastructure impediments. But at the end of the day, India's growth story is not written at all by what the national government does. A lot of my work at CSIS is about state governments. State governments run the country. If you're living in India and you've got electricity, water, sanitation, healthcare, law and order, those things are delivered to you or not by your state government, not by Prime Minister Modi. He is almost meaningless in people's daily lives. And that also are the basic fundamental factors that drive whether your business is going to be successful.
By the way, this is off the record.
No,
All right.
think tankers, we don't mind, but and that's the kernel of hope, I would say, because right now, like I had a Japanese general was coming in for a roundtable at CSIS, and he asked me a really broad question: what is India? And my answer to that, like incredibly broad question, I have to think about it for 30 seconds, was India is a bunch of small farmers, and they're the ones that drive elections, and they want free electricity, and they want free water, and they want everything subsidized. So the cities and the places you'd all look to for customers are the tax-based, money's drawn out, which is why it takes you 3 hours to drive a mile in Bangalore. But urbanization's taking place right now. This next 20 years is going to be the most dynamic and explosive in India's history because voters are suddenly going to be living in cities and driving elections, and they're going to vote for modernization. And that's going to be flipping India on its head for the first time since they got independence almost 100 years ago. And some states will get there a bit sooner than others. So the lack of urbanization is what really draws India back and why they haven't chosen to integrate with the world. But this is that 20-year period where that's going to change pretty dramatically. So I'm more excited about the next 20 than the last 20.
So we're still 2 steps forward, 1 step back. Malachy, what's another 1 step back?
Oh, there are lots of steps back, but I always say that the slope of the line in India is very shallow, but it's still positive. It's always still going slightly forward, even if it feels like you're not making a lot of progress. And I fall sort of in between the two views that have been expressed here. I think Susan's right that there is hope, there is cause for optimism and hope in India, that you are still taking those 2 steps forward in a lot of ways. But of course, I think you're also absolutely right. When you think about what is India, it is that small farmer. It is that rural person. And but when you say India is afraid of the private sector, I think you're talking about that big base of the pyramid that is really afraid of the private sector, and the government needs to protect those people who have been exploited in the past. There is a history of that in India, and India is still a very young country. But I would also say that the government at the top, the reformers at the top, are less afraid of the private sector. There is this generation of managers in government now who have worked in international banks. They are educated abroad. They are open to the idea. They understand what needs to happen, and they're just responding to the political reality of that billion people beneath them who have that fear of liberalization and openness. So you have the top kind of pulling slowly forward and the bottom kind of pulling backward. And so that's why the progress is so slow. But I do think that the attitude in government, certainly in the Modi government right now, is in the right direction, and they're doing what they can to try to manage the political economy of the billion people beneath them.
What's that mean?
3 minutes.
It's not a red one yet. Okay. Thank you. This is not scripted, but how would you guys assess the attitudes in India that seem to be loosening up a bit, given the influence of China? Because it does strike me, at least from over here, sitting here looking at India as an opportunity, that we're all driven towards India by virtue of what's happening with China. Is that real? Or are we sort of getting fooled into thinking India will be the next China, but not really going to get there?
Well, I would say India certainly wants to be the next China.
Yeah.
They've taken steps in the last several years to try to attract some of that investment that's de-risking from China. But at the same time, again, they're not as open as other countries that are also following the same strategy. So Vietnam, the Philippines. And so again, it comes to that hesitation, that natural skepticism of the foreign capital, of the foreign investment, and the concerns about that kind of hold them back from that.
That's a really interesting observation, in that when you look at, as an FDI comparative analysis, you're saying essentially Vietnam is actually an easier place to go, or the Philippines. Again, we're off the record. But would you say that, Malachy?
That's my impression. I don't
Okay.
follow Vietnam and the Philippines as
Okay.
closely as I follow
Right.
India, obviously. But the downside is those countries don't have the natural market that India has.
Right.
So if you're an investor looking for a place to make your investment, you don't have all of the other things that come with having you can say 1.5 billion people in India, but even if you just say, 400 million middle-class consumers and well-educated or reasonably well-educated English-speaking workers in the country, you just don't have that in Vietnam. You don't have that in the Philippines.
Okay.
Too, like India is China when it comes to IT services. I mean, look around the room here. I bet most of you have people doing back end, more employees in India than you have doing your front end work. They've managed, along with Ireland, to really kind of grab and tap that market. And sometimes Indian officials don't even talk about it or even care about it, because they're looking past that, trying to get to manufacturing. But the services has been a remarkable run that they've had. They look at China as an enemy too. Every time you got a BRICS meeting or something, get a lot of questions about, is that partnership kind of growing? No, they've been more aggressive banning apps and trying to ban product coming in from China than the United States has. But they just haven't been able to, really kind of trigger their own manufacturing to make up and be that next China quite yet.
Interesting. Susan?
From our perspective, they are their own markets. So, we're in India to serve Indian customers. We're in China to serve Chinese customers. So there's not a competitive play between the two. I will say, our expectations for each market have shifted over time. So, I was saying to Rick before this panel, I think I've been in this business too long. When we first entered China, we had been in India for a couple of years at that time. We started our China business in 2004. And, China was issuing licenses to foreign insurers, city by city or province by province. And there was a 50% FDI cap in China. And at that time, India seemed to be a market where we expected to be able to grow and expand faster than in China. And then all of the regulatory impediments that Rick referenced really made us none of the foreign insurers were able to realize the ambitions they had for India because of the constantly changing regulatory landscape. And China, on the other hand, we were able to grow and expand much faster than we had expected. And so, of course, we're very bullish on India, and we're for our business, we're bullish on China now as well. But as the decisions that regulators and governments make about how to treat foreign investors in the market can impact your trajectory much differently than your initial plans.
We're living the dream here. All right, time's
On
up.
the record, by the way.
Yeah, right. Please join me in thanking them for their expertise.
Thank you so much, Rick, Susan, Rick, and Malachy. It was a very rich discussion of where there's been progress, where the challenges lie, and certainly very timely as we look forward to the prospects for the negotiation of the US-India BTA. And you gave us very, very insightful and useful background on your experiences in India and where you think things are going. So we absolutely appreciate that.